Good morning, everyone, and welcome to the European crossover webinar. And okay, bear with me one moment. But everyone, welcome to the European crossover webinar. And we did go and see some good closes on Friday as far as markets moving about. And Blake talked about that on the week ahead video. And it looks like we may be actually starting to look like we're getting ready to kick off potential good moves in FX for once. We did go in and see a pretty good movement here in the euro. You can already see it right here at 112. Got above 112, but we've seen what looks to be some pretty good volatility, or at least some good movement. And even the Aussie dollar's already come up here to 70 cents. Dollar yen in Asian trading took a quick dip down here. You can see came down to the 905, 908-ish area here. Obviously, dollar CAD continues to weaken. That wasn't too much a surprise when you saw how gold, it's in and of itself, had also broken out higher on Friday. So certainly some good movements there across the board. Certainly we'll go in and get to those. S&P's still way up here in the stratosphere. We'll just take a quick look there. We've almost made it all the way to 32.55, so quite the move here. And you can see here with gold, almost made it up here to 1520. Quite the move, and made it past here, past this 50%. And we're just trading just above that. Crude oil is still relatively high up here. It made it all the way up to $62, or just about. Moving on to what's ahead for the day, we did go in and have Spanish GDP come in an hour ago, came in up quarter over quarter, 0.4%. But coming into the States, we do have advanced good trade sales along with wholesale inventories. Then later on at 9:45 Eastern, we have shy PMI, as well as pending home sales at 10 a.m. Eastern, that is. And at 10:30 Eastern, because I'm Central Standard Time, we will have Dallas Fed manufacturing. But like I said, we are starting to see some pretty good little movement here in FX, at least, you know, to finish up this last week. So let's go and move this out of the way. Let's take a look at this news here. The Aussie dollar, New Zealand dollars near 5-month top as global mood brightens. The Aussie New Zealand dollars held near 5-month peaks on Monday as hopes for progress in the Sino-US trade standoff lifted risk assets and commodity prices. The Aussie stood at 69.86, climbed 1.1% last week to approach the 70-cent level. For the first time since July, we're still down about 9/10 on the year so far, but well up from a decade low of 66.70 touched in October. The currency also cleared major technical barrier by breaking and holding above the 200-day moving average of 69 for 6 straight sessions, the longest such stretch since early 2018. The Kiwi was firm 67.10, having topped 67 cents for the first time since July. That left it almost backward start of the year, having been as low as 62.04 at one stage in October. Currency's been on a roll in recent weeks as domestic economic data proved surprisingly upbeat and investors scaled back expectations for more rate cuts from the RBNZ. Markets imply only a minor chance of a move from 1% at the next policy meeting in February and of just 8 basis points of easing priced in the entire year. The run of data has not been nearly as favorable in Australia, where consumer prices have been particularly disappointing despite tax breaks and rising home values. Futures thus imply a 32% chance of a quarter point cut in the 0.75 cash rate from the RBA at its next policy meeting in February, and have 21 basis points of easing priced in for 2020. Markets have been wagering on even more, but pulled back as the United States and China finally made progress in their protracted trade dispute, lessening one major threat to global growth. Both the Aussie and Kiwi jumped late last week as President Trump said he and President Xi Jinping would have a ceremony to sign the Phase 1 deal. The improvement in risk appetite has triggered a retreat in Australian bond futures, with 3-year bonds contract hitting its lowest in more than 6 weeks at 99.08. And the 10-year bond was near its lowest at July at 98.69. I'll finish here with the dollar. Dollar dips for the smallest annual gain in 6 years, or set for the smallest annual gain. The dollar was on the defensive on Monday in light year-end trading after suffering a setback in the previous session as safe haven demand for the greenback waned on hopes of a U.S.-China trade deal and renewed optimism about global growth. Sentiment was also boosted during Asian hours after China's central bank unveiled a measure that would lower borrowing costs and boost flagging economic growth. Investors also cheered a report forecasting China's 2019 retail sales grew by 8%. As the dollar fell out of favor, the cash dollar index against 6 major currencies eased a shade to 96.81 following Friday's 0.6, which was its biggest single-day percentage drop since June. Against the Japanese yen, the dollar was a bit weaker at 109.13, on track to end the year slightly below where it started in January. The big gainers in recent weeks have been the risk-sensitive and commodity-linked currencies of Aussie and Kiwi. They both scaled 5-month peaks on Monday. Last week, Chinese authorities said Beijing was in close contact with Washington about an initial trade agreement. Prior to those comments, President Trump had talked about a signing ceremony for the recently struck Phase 1 trade deal. But despite recent rallies, the annual performance of Antipodean currencies were still dreary, with the Aussie down 1% so far this year and the Kiwi off a shade. What's really noticeable is a range of currencies during that year, says Marshall Gitlier, Cyprus-based chief strategist. I expect less of both in 2020 for 2 reasons, he said, noting the expected end of the U.S.-China trade war, which should lead to broader economic recovery around the world. The second reason, Gittier said, was the inflation seemed to have bottomed. As inflation accelerates, countries are less likely to cut rates, and maybe, possibly, conceivably, some countries could start thinking about hiking rates, which would encourage monetary policy divergence. And that would certainly get our volatility going, but we shall see. Elsewhere, the euro rose for a 6th straight session on Monday to 11.98. Bleak European economic data had prompted hedge funds to bet on a weaker euro during 2019, but some strength in recent Eurozone data, along with weakness in other currencies, have lifted the euro. Common currency has jumped 2.7% this quarter, but it's still not enough to wipe out this year's losses. Sterling was higher after the European Commission President Ursula von der Leyen said the European Union may need to extend the deadline for talks about a new trade relationship with Britain. Even with the recent UK general election smoothing the plan for Britain's exit from the European Union, Britain's ability to strike a new trade deal with the EU in a relatively short span of time remains a concern for most investors. With that, we're going to move into the analysis, and let's go on and get started. So you can see here we've had quite the nice run here in the euro. And take a look here with our Asian analysis, which I did want to make a note of that or shared it in the room when we were discussing earlier about the euro. It says the euro, albeit in light trading conditions, closed Friday at its highest close in 11 weeks, taking out resistance at 1169. To start the week, immediate resistance is 1203, which we did get above just barely in Asian trading, followed by a weekly level of 1232, confluencing with 1236. You can see the 1232 here, confluencing with the 38%, which is 1236, which is from 879 all the way to 1814. You can see here. So right there. So we have some nice resistance coming in. You can see right here, 1232 coming right across there. So we're actually going to go with our resistance. We're going to go in and put that actually at 1236. And the bias has certainly turned to bullish now. Who would have thunk it? And support. Well, we did have it as low as 1126, but that might be a bit of a stretch here at this point. Let's see if we can see something a little bit closer. And we'll take a look at the 2-hour chart. So it's going to be right here at 1160. So that's going to be support for the euro, 1160. And let's go move into the cable. So the cable closed back above the pivot of 2980. You can see that clearly right here. On Friday we did. After defending the 2918, which was a 38% back, you can see that here, of 1956 all the way up to 3514, there was a 38%. A rebound to 3195 is in the cards with the initial resistance at 3135. Support is 3089. So we're looking potentially for a bounce back. Now, my thoughts is because I think potentially the dollar index, we'll get to that later, can slide back. And although, like I said, we did really break the back of bulls on this move lower, we did defend the 2980, looking for an oversold bounce. I'm thinking if we do see the dollar side, we can punch up as high as 31.95. But resistance in the short haul is going to be 31.35. We actually made it up here to 31.24, which is actually a 2-hour level. You can see actually right there. You see that? So let's take a look here on the 2-hour. That 31.24 comes in right there. But next we, yeah, right there, 31.26 actually right here on the 2-hour. You can see that coming across. But I've got, as I mentioned, 31.35, so in case they pop up a little bit. So 31.35. And support is going to be for 30.89, and we're actually already there. Support at 30.89. So we've actually already tagged that. It's going to come in right there at 30.85. You can see that right there. You see it? So call it 3085. Let's go move into the Aussie dollar. So the Aussie has successfully broken the year-long downtrend line. The immediate target is 71.23 with initial resistance at 70.27, confluence with 70.32, which is a 50% of this entire move of 66.98 to 73.94. So you can see here we've broken this downtrend line, goes all the way back to December of last year. Finally broke above that and punched up and got above here the 69.14. It really has opened the door for us to make a move to 71.23, which I'm looking for a target. Initial resistance is going to be 70.27, confluence with 70.32. And you can see that movement. Like I said, like this confluence here coming in, you can see the significance of the 70.27. It actually goes way, way, way back. But you can see here all the touches here with 70.27 and confluence with the 50%. Once again, I'm thinking that the dollar can take a slide here, which would allow these to gun some stops. Where that happens today, tomorrow, whatever, I'm looking for that to go and punch up. And then maybe we take a bit of an ease back. For support, we're looking for 69.27. And let's go move on to the Kiwi. So the Kiwi's been on a relentless run with potential to 68 cents. Confluence with 68.06, which would be the 78% of the 62.03 to 69.70. And you can see this. This has just been literally relentless over the course of the last 3 weeks. It has just been quite the mover and looking for areas that, it was going to go on and take an ease. And it's kept on pushing further and further, even getting past here, the 67 cents and pushing higher. There's a little bit of resistance coming in right here at 67.24. It's already had a pretty good run. We're actually going to go on and give it, because it's had a pretty good run, and they've got this nice little resistance coming in. We're going to go right there with 67.27 for today. And support comes in at 66.34. Now that's a ways down here, but at least for today, right there. 66.70. About 40 pips away. So 66.70 for today. And with that, we'll move on to the dollar CAD. The Canadian currency has joined other commodity currencies gaining strength on the dollar after closing below 31.36 on consecutive days. The pair is open to a drop to 29 cents or 2,900 with immediate support at 30.29. Resistance is 31.36 followed by 31.82. The pair would need a daily close above 32.06 to negate the bearish outlook. So potentially we're looking for a move to come down all the way down to 29, but immediate support comes in at 30.29. You can see that here. We're pretty well overdone. We've had a pretty good little sell-off. They may find a little bit of support here. Really come off quite a bit. So we're going to be a little bit more conservative for today, considering we've already fallen out of bed quite a bit. So we're actually going to put this one here at 30.53 for today. And on the upside, as I mentioned, 31.36. For right now, keeping things relatively tight, we're going to go with 31.14. And definitely bearish. But we are looking potentially for a move down here to 29 even, right here. But like I said, we've already fallen off quite a bit here. We can take a little dip lower. I just don't think, I think we will get to 30.29. Don't think it's going to be necessary today. But we may be able to try and make a stand around here on this 30.53. But I think the upside be limited, at least initially, at 31.14. Let's go and move into the peso. The peso broke to new lows to finish the prior week. The pair is making a beeline to 1865, which confluences with 1862, the 161% of 1902 to 1965, the range of a prior failed rally. Resistance is going to be 1905 followed by 1914. So where I'm coming up with this 161%, you see right there? Right there. And that's significant because this is where we broke below the pivot. We tried to make a stand and we had a failed rally up here to 1965. So 161% would confluence with the move to this 1865. We've been talking about potential we could dip down to 1875. So if we get a little bit of an overshoot, that's what I'd be looking for. Immediate support for right now is going to be right there, which is right there, 1875. And resistance, we're actually going to go right there, 1893. Keeping it pretty tight for today. The dollar yen is stuck in neutral above the pivot 927. The pair needs a daily close above 1007 to spark an upside run to 1187. Two consecutive daily closes below 927, we're certainly there right now, will allow the pair to challenge 832. Now, our initial, you had that level before, which is a 908, which is essentially where they found support today. I think it may have gone as low as almost 905. Let's see, 906.5. Okay, so we're going to go with that. We'll say 905 for today, thinking that they don't break yet, although potentially they can. So we're going to go with 905. Once again, keeping it relatively tight. It's our same support from last week. Oh yeah, we had that before, 908. We'll just move that to 905 here. And the upside, right now is going to be 934. 934. There. We'll mark that like that, right? 934. Well, we're going to put a range until we get two consecutive daily closes. It's not bearish. So let's go moving now to the cash flow index. So the cash dollar index looks vulnerable for a liquidation slide to 9601. Confluencing with 9582, the 161% of 9659 to 9783. Resistance is going to be 9737, followed by the weekly level of 9789. Yeah, I think that there's potential we can go and slide that now. Whether that happens this week or beginning of next week, but I think we have that slide that we're going to start to see further dollar liquidation. And for quite a few reasons, I'm not going to bother going into right now, but things are leading in. And we are starting to see some data start to turn around a little bit in Europe. I think it's more about the bets being taken off for even lower prices here on the euro. Dollars been hanging around here, hasn't been able to go any further. We've already had a pretty good run in U.S. equities, maybe looking to bring some money home from the States. I mean, so that's what I'm saying. Just, I think, a plenitude of reasons why we can see the dollar start to slide. And it's really not much. If you think about this, look at this. That's not asking much. You see what I'm saying? So now that being said, resistance today is going to be 97.18. On the downside, I think we can hold, but for right now, we're not going to take any chance. That's still 50 pips away. We'll just call it 96.50. That's what the one thing I can see there. So 96.50. So I think we are open to a slide. And once again, those are just areas to cover. Certainly not areas to buy. And with that, we'll move into the cross rates. So moving on here to the Kiwi yen. The Kiwi yen remains on an absolute tear. Upside target is 74.50. You can see that right there, which also confluence with 74.56 to 78% of 66.28 to 76.81. Initial resistance is 73.71. You can see that there. A little bit of a gap to fill, with support at 72.58. We've already had quite the run here in the Kiwi, and that's why even in the Kiwi versus the dollar, we were keeping things relatively tight as far as resistance. You can see that 73.71. We'll go on and go with that anyway. So we're going 73.71. And support at 72.58. Well, with the run that we've had, I don't think that's asking too much. There is some support just a little bit lower at 72.93. Let's go with that. 72.91. 72.91 here. And let's go move into the euro yen. The euro yen closed the week at new recent high. Initial target is 24.12 with resistance at 23 even. Confluence with 2304. Support is 2207, followed by 2158. Now, we did see the yen strengthen a bit here, so we may see a pause. So we're going to go, at least for now, we'll go and talk about today. It'll be 2264 as our bias chart resistance. And actually, the euro's yen is probably holding up relatively well. Support, you can see that coming right there. Call it 2204. 2204. Now, the euro is attempting to defend a push lower. Key support is 59.54. You can see that clearly. A daily close below should allow a break of 59 cents, even with a intraday target of 58.32. Resistance is 61 even. The pair needs consecutive daily closes above 61 to negate the bear stance. So we're trying to defend this area right here. And they did kind of try to make a little bit of a hold here on Friday, a little bit of an analog stand and kind of pushing here. Resistance, we're trading in such a tight range. It's going to be right there. It's 60.55, 60.55. And it's definitely bearish. Support right now is going to be 59.75. So the Euro Kiwi is holding just above 60 cents even, 66 cents even. Support is at 65.75. Confluence was 65.94, which is 78%. And 65.68, which is 161%. You can see that lower. But we are trying to make a bit of a stand today. As I mentioned, the Kiwi's taking a bit of a pause after being on a relentless run. A close below support challenges the 64.52 cents area. A minor resistance is 67.12, followed by 68.04. So we're going to go with the 67.12 for today's resistance. Clearly bearish. And support, well, right here. See that coming right there. Make that stand here. Just going to be 66.32. We tried to make that stand here on Friday. We're holding up okay, not too bad. And let's go and move into the Aussie yen. The Aussie yen has broken above the key level of 76.19, allowing for a move to 78 cents even. Initial resistance is 76.94 with 77.25 secondary. Support is 75.77. probably 75.48. Well, I like the 75.77, and we'll go with the 61% up here for resistance. So 75.77 on the downside. And on the upside, 76.58. We were able to close above the 76.19, so the door's open for them to go higher, potentially all the way up here to 78 cents, but that's not going to happen immediately and anytime soon, but I think eventually that's where we can go to. But for right now, 76.58 on the upside, 75.77 on the downside. And on to the guppy. The guppy is bouncing back from oversold conditions. Key resistance is 43.81. You can see that clearly coming across. Confluencing with 43.76, which is the 38%. We're so close, I didn't even bother to put the 38% because you can see here, we made this run. We're 38% comes in there. Here's a 50% off of that. I'm thinking we can still potentially push higher. The difference is right now we're seeing some strength here in the yen, so that's kind of capping that. But 43.80, 43.76 is a set 38% of this move from 41.15 to 47.98. A break above 44.57 will take us to the 50%. Followed by 45.09. Support is 42.26 with additional 41.50. So you can see here the 43.81 and 43.76 is a 38%. So we're going to go with 43.81 for resistance. And for support, right there coming in there, 42.54. As long as we're below this 43.81, it's going to be bearish. It's going to be bearish. I mean, bulls took a pretty good knock, and so going to be looking to sell rallies. Let's go on and move on to the sterling on. The sterling on is holding just above the trend line. A further break appears likely with a move to 85.69. Initial support is 86.39, and resistance is 88.42. So we're going to go with that 88.42. It's holding above this trend line for now, so I'm apt to. It's still quite the break, though. I mean, from a longer term perspective, it's bullish, but from a shorter term perspective, honestly, as long as they stay below this 89.76, it's got to be bearish. So it's going to be bearish. It was 88.42, and on the downside, right there, 86.79. There we have it. Go and take a look at the equity markets right now. You can see we're still holding up here with the SPOOs. We have seen the bonds come off here. Right here. Had a pretty nice little run here in the bonds. And kind of exhausted up here. We paired back. And gold, quite the mover here in gold. What a run here. We had that run up in here. 15.15 or 15.13 is a 50% of this move here. There we go. You can see that. So we're taking a little bit of a pause here, but this is certainly on a breakout after we got above 1,500. And as I mentioned, crude oil still remains very strong here, close to $62. We'll see if we can get this to ease back a bit here, and the SPOOs. Certainly, like I said, we're seeing the dollar yen under a bit of a pressure here. Really just strength across the board here in the yen. But you can see here. And we've also seen a nice pop back up here in the cable after coming down here to 30, this 3083 area here. See how that plays out. The euro weakening a bit, but be careful with that. Like I said, we have the potential to move higher. And that's going to be it. We'll see you in the chat room and later on with the FX Daily Roundup. Thanks for joining us here on the European Crossover webinar.